Welcome back. We're with Yuko Toshida, CEO of Hito LLC. We're talking about tax credits. We're going state by state and talking about the available tax credits, everything from R&D to employer tax credits. We've hit Michigan so far, Illinois. We've got a lot of states planned here. But today, specifically today, we're talking about Arizona. Hopefully we get to some other interesting topics like the big, beautiful bill or, whatever else Yuko wants to hit on. How are you? Good morning.
Good. How are you? I am excited for July 4th week.
Oh, yeah. So for those of you guys that are listening, it is 4th of July next week. I think I'm already checking out and getting ready for some family vacation. Hopefully you are not. You are diving deep into how to save lots of money. But we are recording this podcast to help assist with that. Where are you going for 4th of July? Are you doing anything fun?
Yeah, I'm leaving to Hawaii tomorrow.
Oh, my goodness. Okay.
Yeah,
I love it. Maybe we'll hit up Hawaii tax credits next. We'll go
sounds
there.
good.
Well, let's dive into Arizona. I know Arizona is a state that is very pro-business and has a lot of incentives, everything from international to local businesses. I know international tax credits are a big deal. They have a very high threshold for qualifying. What is the number? Do you know off the top of your head?
Yeah, International Operations Center tax credit, I think require like 1.2 billion investment. And Arizona has been quite successful attracting overseas company like TMSSC the last few years.
Okay, big ones. I love that. Hopefully, I'm not sure how many people in our audience actually have 1.2 billion to invest in Arizona, but if you do, that's very helpful. But let's kind of walk through the opportunities that exist in Arizona for Arizona businesses. And once again, you don't have to be in Arizona right now to qualify these. A lot of these is the incentive to move into Arizona. Is that correct?
That's correct. Or move into Arizona or expand within the Arizona. So, and one thing to know, Arizona is the state, moved from look back tax credit to more forward thinking. So majority of credit, we have to get pre-approval from the state before you make investment.
Got it. So this is worth a couple of conversations ahead of time, explore your tax credits, negotiate them, then figure out what kind of opportunities exist, and you can figure out if this is the right fit for you and your company. Let's jump into that. We're going to focus first on qualified facility tax credits. What does that mean?
Yeah, quality facility tax credit was established to promote manufacturing company or research and development company in Arizona. So their requirement depends, but typically they require $1 million of capital investment plus additional employees. The tax credit itself is about 10% of the qualified capital investment or 20,000 per net job. So different type of tax credit depends on what they want to do. But this one too, we need they need to receive the pre-approval from the Arizona Commerce.
Okay. So you're going to apply, you're going to negotiate a little bit, you get approval, and then you expand out and you get to receive those tax credits back.
Correct.
Is it, do you have to take that all at once? Can you defer those for a few years if you don't need all the tax credits in the current year? How does that work?
Yeah, typical Arizona tax credit, this is a tax credit based on the investment, and then if you cannot use it, you can carry forward in your income tax returns.
Got it. I love that. So this is the qualified facility includes jobs. There's also the qualified job tax credit. Tell us a little bit about those. It sounds like these overlap a little.
Yeah, a little bit. So quality job, what's different from quality facility is quality job doesn't have specific industry focus, but you need to create quality job or high wage job. How they define it is are they paying more than 100% of median county median wages. So depending on your wage level, there's a minimum capital investment requirement. So for example, urban, if you're only paying meeting that county median wage 100%, your minimum capital investment is $5 million. But let's say if you're in a rural location and you're paying 150% above the county median wages, your minimum capital investment like 100,000. So like, depends on like what your circumstances is. The minimum capital investment requirement is going to be different. And just to note that to qualify for this like, quality job tax credit in the urban location, they have to create 25 jobs, and rural location, like at minimum, they need to create 5 new jobs.
5. I mean, that's a low bar. 5 new jobs in a, and then the urban environment is 50. That's not, that seems more than reasonable.
Rural is 5 and urban
Rural
is
is 5.
25.
25, okay.
And the tax credit itself is like, $9,000 per qualified employment, like a qualified like job, right? Over 3 years. So like, it's pretty significant like tax credits if you think about it.
Yeah, it sounds significant. The qualified facility is way bigger, right? You're moving from that 9 to 20. That's a big jump in terms of if you're in the right industry.
Right.
But once again, these both have to be negotiated up front. They're not just you're there and you've created some jobs. You have to do some pre-work here to make sure these are approved by the Department of Commerce. Is that right?
Yeah. So the pre-application process is like, pretty fairly like, simple in Arizona. You just need to like, file the paperwork to say like, hey, we have an intention for like, capital investment. And then we are hiring like, jobs like within the like Arizona over a 3-year period. So it's fairly simple, but if you miss that paperwork, like, it's gone, right? Tax credit is gone. So like, the timing is really important and making sure that filing those like with the right information and right department.
I love it. But let's talk about R&D. That's the one we hit on with just about every state. It's one of the main things that Hito does. Tell me about the R&D tax credits that are happening in Arizona. And obviously there are R&D tax credits at the federal level. These are state specific, correct?
Correct. But Arizona, similar to like, many other like, states, they pretty much piggyback off of like, federal statute. Any company who are doing innovation, right? Like if you're improving or creating like new product or process, you may qualify if you hit the 4-part test. So 4-part test, like we talked about it, but like, I will refresh that. Like, first one is like, is it based on the hard science? So is it like, biology-based, computer science, engineering, and so forth, right? So for example, like managerial, like, science, that's IRS call it like, more soft science, or what else would it be? Soft science, social science, and stuff like that. So those won't qualify. And second test, like I will always say, is like, is that product or process, are you guys like, actually improving or creating like new things for your company? So it doesn't have to be new to the world, but it needs to be new to the company. And third and fourth test like goes hand in hand. Like, on the onset of the project, was there like any uncertainty exists? You may know like roughly how to get there, but were there like, actual uncertainty, and how to like prove that is like, did the company actually had to do trial error or some type of test, like simulation could be one, right? So that will showcase that to IRS, like, there was actually uncertainty, like, exists. So if you hit like those, like, meet the 4-part test, like, you may qualify for that credits. And for what's unique about like, Arizona R&D tax credit is like, if you are a company less than 150 full-time employee, some of the portion of the R&D credit may be like refundable. So that's something like, to keep in mind.
I love that. Yeah. And these credits are significant, right? They're not just a little bit. It's amazing to me which businesses qualify for R&D tax credits, the things that you wouldn't even think about. Can you give some examples of that?
Yeah, so for example, like, brewery, we work with like brewery, winery, and stuff like that too. Like, some of our clients, like, creates new flavors every single year. That, like, formulation, like if they're like actually using like scientific method too.
A scientific method for a brewery to create new beers counts as an R&D tax credit.
Yes.
I learn something every day. This is crazy. Okay, I love it. So as long as you're following a scientific process and you're creating something new to the market, you can apply for an R&D tax credit.
Yeah,
What else?
New to the market, new to the company.
Oh, new to you. Okay.
Yes.
So if you're building out, you haven't had an IPA, who hasn't had an IPA? If you're, figuring out some other, beer that you haven't introduced to your company, you can actually come and say, hey, we have a new Pilsner, and you can apply for a R&D tax credit.
Yeah,
Amazing.
definitely.
Okay. But like not service-based businesses that are doing stuff like marketing or whatever. It has to be a hard science, correct?
Correct. So, sometimes we get those questions, but the question we will ask is are you actually developing scientific based product or service, right? So if you're creating customer facing software within the marketing agency, that may qualify. We have to go into does that hit all the full per test? But if they meet full per test, that should qualify.
Yeah, so software companies, manufacturing companies, lots of industries. Even if you don't think you qualify, it's worth a conversation just to verify and make sure you can
Definitely.
fit into that 4-part test. And that's one of the things that Hito does is they help make sure that you assess, and if you ever get audited, they're going to stand behind that and defend that tax exemption. Arizona, just like any state, has a lot of opportunities of businesses that they're trying to attract. So there's manufacturing tax exemptions, data center tax exemptions, lots of other business types. When that kind of fits into this this big beautiful bill conversation as we're trying to bring manufacturing back to the United States, I'd love for you to expand more. I know you have a lot to say, especially on the R&D tax credit portion of the big beautiful bill. Let's dive into that next. What's happening? What should we know? Give us some more insight.
Sure. So the draft from OBBB was published last week, and just focusing on research and development tax credit, there was a favorable change on section 174. So just to refresh everybody's mind, R&D tax credit is one thing, right? If you fit into these 4-part test, you may be able to take the R&D tax credits, which is dollar to dollar deduction of your taxes. In 2022, they enacted mandatory Section 174 amortization. What that means is before 2022, the research and expense incurred in that year, you could deduct fully in that year plus taking the R&D tax credit. 2022 came, you had to capitalize those research expense and amortize over 5 or 15 years. So therefore, especially a small to mid-sized company, there was a lot of cash crunch because if you think about it, if you had $1 million of research and development expenses, you had to capitalize it. Only that 20% could deduct in that year. So although you have R&D tax credit, a lot of companies saw that tax go up. So OBBB draft is saying that they're gonna repeal that going forward, meaning from the 2025 tax year.
Okay.
However, if any company are considered to be small company under Section 481, you could retroactively amend those return and then reverse that. So small company doesn't have to follow 174 mandate going back. So there might be a refund opportunity as well.
It sounds significant, right? Go
Yeah.
back to what year?
2021 at this moment.
Okay.
Yeah.
So
So
you can go back
hopefully
and
that will.
recapture 4 or 5 years worth of credits and retroactively. And so that applies to your taxes, or you get to take that in a cash payment or both?
Cash payment, cash refund.
Wow.
Yeah.
Okay.
So it will be significant. And hopefully, what I've heard is they're trying to pass this bill in July. So hopefully, it won't prolong because a majority of taxpayer has filed 2020 or tax return before September, October, 2022. So the statute is approaching, statute of limitation is approaching.
Okay. So if you qualify, this is a significant opportunity before the statute of limitations excludes you from taking those credits in previous years. So if you think you qualify, or even if you don't think you qualify, it's worth reaching out and having a conversation and seeing if there is money on the table that you're leaving behind.
Definitely.
Wow. Yeah, that's amazing. I love that. That's such a, there's all these little nuances that are coming out. And once the details of the bill, hopefully that gets passed in the next few weeks. And, this drives some more capital investment and growth for the companies that you are helping serve. That's amazing. And this is federal. This isn't just Arizona specific. So that big, beautiful bill may offer some big opportunities for companies that have been investing in R&D. I love that. All right. Anything else we want to add to Arizona?
I think this is good.
Okay. Well, keep us updated on the big, beautiful bill. This is going to be amazing. We'll look for any emails. If you want to sign up for emails and notifications on what's happening with the big, beautiful bill because you think you might qualify, go to hitollc.com and there's the opportunity to sign up and get updates over there. All right. Thank you, Yuko. Happy 4th of
Thank you,
July.
Paul.
Have fun
You
in
too.
Hawaii. We'll see you.